Hello everyone and welcome back to another video. In today's video, we look at the markets across the world for the week ahead, but we'll also be taking a deep dive here into what the disappointing August jobs numbers really mean here for the price action and of course, the overall health of the US economy in what is going to be a highly volatile couple of months. There's a lot to unpack here in today's video, and I think you guys are going to enjoy it quite a lot. Stay tuned to find out more. Okay, well, as we always do, we always like to take a look at the week in the past in terms of understanding what might be happening in the future. So this is actually the overall S&P 500 heat map of large companies. And we can see that there are some red sectors, such as the financial sectors, and some of the technology companies were starting to play out. It kind of notes that that idea of work from home or stay at home due to the Delta variant is partially playing out here in the market. If we take a look at the one-day performance, so this was the Friday performance, really across the board, didn't really know what it was doing. And when you have a look at the indices, you can see that. Nasdaq was up 0.31%, barely up there, but it still was the strongest sector. S&P 500 flat, Dow Jones barely down, and IWM Russell 2000 staying in a lot of these ranges. When we look at the sectors, which is a very important thing that everyone should look at, you'll notice, again, technology, healthcare, one of our favorite sectors at the moment, biotech in the middle here, but there weren't any real defensive sectors other than the healthcare showing incredible strength. And that's something you want to be looking at. Generally, if you have XLU, XLP, healthcare all at the top and the market's going up, that can mean that Wall Street's adding to defensive positions. And obviously what Wall Street does, we need to follow them as much as we can. Let's now take a look at the jobs report, because a lot of you are probably looking at this number and thinking, oh, it's so bad. It's such a big miss. How can the market not go down off this? I think you are correct. And we'll talk about how it is a bad jobs number, but we're in a market where it's all about the Fed and what the Fed does, as we know. So leisure and hospitality was probably the big outlier here. 0 jobs added, and you would expect that to continuously be rising at this point in the year. And I think this shows that some businesses are a little bit scared about the Delta variant, at least shuttering of potential parts of the economy in the US. And in general, the fact that the unemployment benefits that I believe close in September and October in certain states in America were paying more money than people going and getting leisure and hospitality jobs. These all impact how these jobs numbers look. Government also was down. That's been a big, strong driver of course, jobs in the US. And then we have retail trade, negative 29. Now, partially a seasonal, but also a sign of the times. Online really is taking a big market share off retail trade. So that might continue to be the weakest sector. And the strongest was professional and business services, which is a good number to be strengthening on. So overall, the non-farm payrolls number was certainly a miss. In normal times, this would send the market down. But what it instead did was send it like this. And we'll explain in some ways how that's happening and what that means for the week ahead very, very soon. Let's move over now to one of, I think, the most important stats or the most interesting stats that's going on in the markets right now. And this was whether we need to really be concerned about the long-term future of the stock market. And I've mentioned several times that I think this market is going to continuously be higher and higher and higher, at least to 2025, 2026. And there are quite a few reasons why I believe that. We've talked about it in our live streams, etc. But this is an interesting one. So these are the monthly win streaks for the S&P 500, and we're on month 7 at this point. Now, what you'll notice that after month 7, often there's a little bit of a decline that occurs. So here's the month 7s and the month 7s. Generally, that next month is actually a little bit negative when you're taking a look at the average here for the month 7s. But again, you take all of those, you extrapolate them out to a 6-month, 3-month, and 12-month. What you guys will notice straight away is that they're all up across the board, especially the 6 months after. The facts and the numbers here are incredibly strong for it. 92.9% of markets were up. And on top of that, the mean and the average was also very, very strong. So if you're worried about, let's say, if a pullback did occur, should you really be worried statistically? Absolutely not. The market is a growth machine. Of course, that's what it's trying to do. And a lot of these stats, even with great win streaks, that's really underpinning a market that's going to have a lot of resilience, and it's going to continue to try to pick up and continue to try to find new highs. Now, there's always an outlier, but I thought that might bring up something for people that were scared of markets or scared of current levels. Unfortunately, as we've detailed many times, if you go have a look at the Shanghai Composite or something like that, you will notice that markets can go up way more than you think for quite a long period of time. And we're possibly not even close to the top of a bubble from that perspective. Just remember that. It's just, they can go very, very far. Verticalness can get crazy. Let's have a look here at the VIX and the volatility index. So that did spike a little bit on the Friday session. And overall, it's just around that level that we do expect volatility to come in. Now, good news for people that are expecting volatility is that we don't actually have that much news. And you might say, but news creates volatility. Yes, it does. But when there's not much news, a lot of manipulation and excuses can be used to push the market round. And we're in a very key neutralized zone here on the S&P 500 and Nasdaq that we'll be talking about soon. So you're going to see exactly why, if we get a movement either way and we close above a level or below a level, we should see this VIX potentially spike quite a lot higher. So it's right around that level of support, and we'll continue to watch that very, very closely for the week. Let's have a look now at the dollar index. And I think this was one that just moved incredibly quickly. I mean, basically it was already underneath our big support here at the 50 exponential moving average. It then sold off further into the jobs number, showing that maybe there's more support needed for the US economy, puts weakness on the dollar. It did rally a little bit after that event, but we kind of expect it to continue to find some weakness. So if it does come up this week, if you're looking to short it, 92.40 will be one of the key zones. Previous support becomes resistance, and the support's around that 91.80 area. So keep watching that. Dollar index, always good to play. Now, this was probably the best trade. That was silver for the Friday session. We have been talking and talking and talking about this 24.20 zone. Look at that. We get the 1 hour closure. Here's the series of higher lows, ascending triangle, beautiful stuff here. I know a lot of people in the live stream were taking this trade, and congratulations to them. A few of them even had 24.70, 24.80 as they take profits. And I think we boxed up the range. What a great take profit for them. Excellent stuff here. But I think this does also show that there could be even more movement on silver in the future. And I'll show you guys what I mean by this. So if you're a silver trader, you're probably watching this, and that is the trend line down. So basically the last couple of peaks here have been met by seller demand. If we get silver doing this, then what's going to happen? It's back in a nice little seasonal play here towards the long side. So silver's at resistance. It's at our box where we expected some resistance to come in. But if we get a closure out here and we continue to see weakness in the dollar index, this might be a nice trade. Remember, silver is quite low. If you actually look at silver's price, it's the same price as it was 27th of July, 2020. So around that area. So it's not really the greatest investment since then, but it's found that big base support. It's got a massive channel range, and it is starting that repair. So something interesting there. If we move over to gold, which a lot of people are also interested in, this one didn't do as much. And I think that's because gold had moved up already substantially. So it moved to the 1830, found resistance as we expect, and then it sold off a little bit. If you're buying this, you're looking at 1820 as a support zone. Previous resistance becomes support, or we close above 1830, come back down, retest it, and then you take it long. Great technicals here on both pairs, and I think they open up some very interesting opportunities. If you're a big bear on this, I don't know if I'd be selling it here, but if you are a bear after 1807, that's where the real sellers will come in for gold, and probably be pretty brutal. So you can check that out. We'll go to US oil as well, another one that's hitting the trend line. So we've got here the down trend line. We also have a inverse head and shoulders, which is potentially, looking to go higher here. A lot of kind of convoluted numbers and stuff coming out. We have the previous resistances. I like this 69 to 69.50 for looking for lightning bolts towards the buy side. So if we go down here to the 1 hour chart, what you guys are going to notice is that, well, first that looks a little double top, but let's say we did get a turnaround and it did like this. At that point, I think it would be actually quite strong buying. So US oil could be a good turnaround. It's hit the trend line. It quickly bounced into this level, but there's a lot of open space for it to move up 72, 74 as soon as we get through and really start showing that extra repair. So I think it's all about showing the extra repair here. Once that occurs, we can move towards 72, 74 and those key levels. This one here right on the support on the turnaround at this point. So we'll move over now to Tesla. So we saw a lot of options expiring last week. Now, people that have been trading short-dated options have frankly been getting destroyed by Wall Street. Wall Street has continuously punished this stock down within the biggest options of the week. And in our Tuesday video, we'll be opening up all of the options, seeing how it's trading. But the key resistance zone that you need to be watching is going to be 740. If we get through 740, you'll notice here, previous resistance became support, nice little daily bullish hammer. There's so many wicks here. So we close above there, we finally open up, I believe, that level of 775, 780. I'm excited for guys that are in Tesla. Let's hope it can happen. It's been a long time. This stock has underperformed the market. It's underperformed a lot of things. We have our great trend line. We have the level here. And if we close, we should surely be able to get back to that 780 range and hopefully be able to really start stacking on some of that hype into Tesla. What do you guys think in the comments down below? Will Tesla move this week? What's your target? Let us know in the comments. I'm very interested to see what you guys are doing. AMC, another one that's kind of stuck between two areas. I would like AMC at about 45 plus to go towards that 48. And of course, 48 this week should be leading into 52. There's a lot of interest still in this stock, but unfortunately, like what always happens is that when all the retail traders seem to disperse and go into other stocks, whether it be Skills, Clov, SPRT, it doesn't really matter. It always, like, everyone disperses, and that takes away the potential of strong short squeezes on the GME and the AMC positions. So we have two little rejections here. We can see where the peaks are. Most people look for this for the long. So if it does get through 45, I feel like 48 and then 52 are the next key resistances for the session. GME, similar situation, back at the support here. It's been a little bit weaker. Couldn't quite rally through that 226, set 227 zone. So we're looking for this one to bounce off this area and continue moving forward. Let's hope it can do so. We'll move over to Apple. Apple absolutely has no idea what it wants to do, and you can tell it in the charts. We've got a rejection candle. Some would call this a shooting star. We've got a long leg doji, an indecision candle. We have, of course, the lows and the highs. And while Apple's trading in this range, it's very difficult to predict future movement. Basically, these two levels here, about that 155 or that 152, a close either way, close above, we could be opening up that 160, 165 zone, and a close underneath 152, well, we just come back down to the 150, and then we see whether this previous resistance can hold it. So Apple is really tough. I mean, when you're looking at a chart like that, it's literally weakness looking candle, no follow through, indecision, and in the middle of that range. There's not much you can do other than going into the 5-minute, 15-minute charts. So very, very much neutralized there. And I think that's the story of a lot of stocks here. Let's take a look at the Nasdaq. Here's the US 100 futures. And what you'll clearly see is you've got long leg doji, again, a high and a low, and it closes at the same point, indecision, a weakness candle, a long leg doji, and a slightly bullish candle. So let's put this in the perspective of the QQQ, which is what most of you guys in America trade. And we go to the weekly here. Let's have a look at how the weekly closed. The weekly closed, if you just ignore all the daily, you would say, okay, the weekly closed pretty nice. Nothing weak about this candle, closed quite strongly. When we go to the daily, you'll again say, all right, well, there's not that much going on there. But then when we go to the 2 daily, you'll notice this is what we're looking at. So we've got long leg doji, 382.68 high. We've got the weakness here, 378.40 low. And we've got what could be potentially a hanging man or something like that sitting right around this level. Now, this is a 2-day chart. You don't usually use these, but what I'm getting at is that there is a range that's trading here and the market still doesn't know how to interpret that jobs figure. So it was going into a long weekend. Technically, usually long weekends act bullishly, and then the Monday and the next week can be a little bit of a sell-off, kind of dip. Most sell-offs right now have been occurring around the 14th and the 15th of the month. Okay, so if you look at every single 14th of the month, pretty much going back now 6-7 months, that's where we've started to see the sell-off. But if we do close underneath 378 on the daily, I believe we move down to 375. If we close above 382, then we can move quite a lot higher, and that's going to push the Nasdaq into the potential of really moving into that 15.8, 15.9, even 16,000 range. So the trend is still up. Nothing is looking bad at this point. These are the key supports to be looking at for the week ahead on the QQQ. And I like both of these levels quite a lot. So if it did happen, you're looking for little lightning bolt movements up so you can resume in that uptrend. There's nothing bearish currently showing on this market. The S&P 500 is exactly the same. These are the key levels that we had, and we can maintain these key levels through the week ahead. So basically, we'll get rid of this one. We never had that one. But we'll get rid of, basically we had the 45.20, beautiful support. Great buying last week for the day traders. We have the 45.50, great resistance. We have long leg doji, rejection, rejection, long leg doji, indecision. So this week we will get a close above or below. I think that's pretty positive we will. We're at the community trend line top, one of the community trend lines. You can see the bigger one over here. So if we sell off, it makes some sense. And this is exactly what we're looking for. So once it gets, if it gets underneath 45.20, then it moves to 4,500 in the day trade kind of side. Then 44.80 is the next logical conclusion. And after that, we have, some bigger pullbacks than occur. But remember, the 44.80, if it did come down here, is the 20 moving average. So every 20 points here is pretty key. And when we move over to the SPX, so the real market, where you should be doing most of your analysis, you're going to notice that, again, very large little trap here. So you've got that 45.50 that we should have for the resistance, the 45.20, what a beautiful buy zone area that's been. And if we close above or below, we should at least go that 30 points, if not a little bit more to the upside. So 45.50, I think once you close above that, 46 is the next zone. There's just some really cool little key areas that people can be looking at in the intraday trade. And I think this comes back to the idea that we're semi-neutralized in the market. We're at resistances. We know that 7 and 8 months and 9 months are those danger months in the bullish trend, because if we keep getting these higher and higher months, it's only a matter of time till we get that little bit of weakness. And then if we can take advantage of that weakness, we can get that long-term gain as well. So just remember, that's why we're neutralized in the market. The stats don't technically lie. They don't always work. But if you go back and you have a look at those stats we talked about at the start of the video, I think they're pretty good. Let's move over here to IWM. IWM hit our resistance of 230, sold off a little bit. If you're looking at buying this, I guess 225 is the key support zone. However, I'm not a huge fan of trading the IWM when we compare it to the S&P 500 and Nasdaq. 230 break should go to 233, and as we know, 233 is the top of our massive range here. And if we close above that, well, it could be really on, and maybe it's one of those exceptional streaks. Let's move over to Bitcoin. Bitcoin continues to basically just hover around its area. You've got here a long leg doji on the daily, showing that it's indecisive at the peak, which makes sense. We get a little closure above that, should probably rally. Then we move towards the 5150, and then 55, and then 60,000. They're going to be the key levels to look at for Bitcoin. There is nothing really bad looking about Bitcoin. If you're really looking for weakness coming into this coin, it's going to come from BTC shorts. And we just do not have the big whales. They're not getting us. They're not eating the plankton right now. They're in hibernation. So until this starts to rise, I'm still not scared of the Bitcoin market. I think there's a lot of possibilities here. Now, do I think it's 200,000 by the end of the year? Probably not. But there is potential here for that 80, 90, 100,000 number to come out of Bitcoin over the next 6 to 12 months, as long as the whales don't attack it. And I'm sure they will at some point, but just keep watching BTC shorts. I think that's a good one to check out. In terms of news for the week ahead, very little news. We do have some ECB press conferences, money policy, etc. that's coming out on the Thursday session. However, I think really the only US news of importance is the PPI, other than the normal unemployment claims for the week ahead. And yeah, PPI is really all you're looking at. So it's a week that's going to be allowed to do its thing. Wall Street is going to make a decision, is going to come up with an excuse either way, and let's see what they choose to do. This was a long video, but I hope you guys enjoyed it. Remember to subscribe if you did. Hit that like button, and down below, let us know what your thoughts are about Tesla, guys. It'll be good. It's going to be a great week, and join us Tuesday for, of course, the live market open. Catch you then.